I'm super excited about this video because I have so many real estate agents that reach out to me a little bit frustrated. Jaime, I want to be part of EXP and I understand the stock, I understand the revenue share, I even understand the commission split, but I have no earthly idea how to calculate these fees. I have so many different answers from so many different websites, so I just need to see what the take home is going to be. And those agents are blown away whenever I break down the numbers exactly as you're about to see here in a couple of seconds. So they get to see exactly what their production looks like at EXP before they make the decision. So this is something that is super important as you're looking at the model and compare it against what you have right now when it comes to the real estate brokers that you're with. So I'll be sharing my screen with you and sharing with you what a $10 million producer here at EXP can take home. Now, before I get to the screen share, understand that I am no accountant, that I'm not a financial analyst, that I'm not anything along those financial professions, if you will. So take this with a grain of salt. Do your own due diligence, do your research. This is something that I have personally created. This is not something that was created by anybody else. This is something that I personally have done. So you will have access to this particular calculator. If you stay to the end, I'll share with you exactly how to claim it. But with that being said, understand that this is for informational purposes only. I am not making any representations when it comes to what the stock is going to do, when it comes to the earning potential at EXP. So just be fully aware of that. All right, so here we are. Here is a calculator that I use whenever we're breaking down sales figures, whenever we're comparing what has already happened to what it could have looked like under the EXP model. Now, there are several things that cannot be baked into this calculator. Again, we are talking about what has already transpired. At EXP, if you had done the same production, I can compare the apples to apples from a numbers perspective, but I can't compare the potential, meaning on your present brokerage, if you did all of the activity that you're about to see here under a $10 million production, if you did all that activity without many resources, so with little to no help, then chances are that at EXP, it could be higher because all of the resources. Now, on the contrary, if you absolutely love your brokerage and you really don't have a reason to leave outside of, hey, maybe the numbers just make sense, and you're super incredibly well supported in that ecosystem with your present brokerage, then it could look differently at EXP. I'm not saying that you're going to get more or less support than what you have right now. That's your decision to make, and we can have that conversation. But again, I can only speak to what has already happened and what it would have looked like on the EXP side. So I want to make sure that you were aware of that. So let's get going. Under this scenario, let's just say there's 40 transactions that you've had, and then the average sales price was $250. So the total sales volume is going to be 10 million. So these do not have an equation behind them because these are subject to change. Some of you know exactly the sales volume that you've done and then have to figure out how many transactions it took you to do. Some of you are very transaction based oriented and don't necessarily know what the sales volume is or even the average sales price is. So these are pretty open. These are they are not tied to a formula right now. They will in the future, but depends on when you get the calculator. If you get the I think like I'm on the 10th version. I just keep making it better. But anyway, so just giving you a heads up on that. So with these, you can change those, but this is just more for our visual representation because I walk this with real estate agents, so I know to do that. But here, anyway, where it actually begins for you is assuming that you've done this level of production. Again, you're a $10 million producer. The monthly fees at EXP are $85. So $85 times 12. That's a little bit over $1,000 per year. That's what it costs for you to be part of EXP. All right. So then now, let's just say you had if you go to 40 transactions, just so you see this, and you type in the 250 that you were at, and then the average commission was 3%. It could be higher, it could be lower. Most of the time it's going to be lower. You're going to notice here that it's a $10 million sales volume, but we need to keep this number below 2.66 million. And the reason we're doing that is because at EXP you have a cap. The cap is $16,000. You won't be paying on a split perspective. You won't be paying more than $16,000 to EXP. That is the cap. So some of you might not have a cap. Some of you may be at 70-30 forever. Some of you may be at 80-20, but forever. Some of you may be at whatever split you may be in, but have a cap of 20,000, 25,000, 20 whatever thousand. So that's the money that goes to the brokerage. So just knowing what most of you know what a cap is, but I just really want to break things down. But anyway, so you see here, we need to keep this number below 2.666 in the million. In the next iteration of the calculator, this will actually be done for you. But right now we need to do a little bit of math. So we need to, this is the only math that you're going to need to do. This is the only physical thing that you're going to need to do. Everything else is already created for you. So let's just say if we do 10 transactions, we're close. So I can already tell that with 10 transactions, the next one is going to put me over that number. So if I do 11, it puts me over that number. Now, I could just go and do the simplistic route of doing 10 transactions or 11 transactions and then keep going to the next one. But I want to be precise with you because the dollars and cents matter. That's one. But two, I want you to know that something very important. The sales volume of 2.66 million means that you cap at $16,000 with your broker split. So with that being said, we need to be precise, and between the 10th transaction and the 11th transaction, there's a delta. You can see it here. It's 2.75 minus 2.66. That, what is it? Almost $100,000. That's going to matter because that $100,000 is actually not split on an 80-20 model. It is actually a 100% model. So that matters to you because, in other words, it's a round way of saying it's prorated. So the entire 11th transaction is not all going to be included in the sales volume. And this may not matter now because you see it's $100,000. But what happens if you're $1 away from capping at $16,000 and your next transaction is $1 million property? Then you're gonna care that I was precise, right? Then you're gonna care that, oh no, that makes sense. The decimals is well worth it at that point. So what we need to do right now is just some very, very basic math. So I'm going to do 2.66 million, and I'm going to divide that by this, and I'm going to open this up. So this means that it's 10.666 forever. Okay, so to be a bit more precise, I'm going to go 2.666666666. All right. And that is going to be, I put enough sixes here, so that is going to be, it just rounds up, so that's going to be fine. But you can see here what's important to us is the 16,000. All right, so we're going to keep going. Just now that we have our number of transactions, and now we know our average sales price, we know the average commission, let's keep going. And the reason we broke that down is because we have a post-cap activity. So there's two formulas. And again, this is being precise, and you're a business owner. This matters to you. So I want to make sure that you get this. So we have this amount. Now then we're going to subtract 40 by this, and we're going to get to that second formulation, but let's not get ahead of ourselves. I want you to see the exact number breakdown. All right, so the broker split at EXP is 80-20. If you're a brand new agent, your first 3 transactions are going to be 60-40, but after that it's going to be 80-20. So just be aware of that. So that's one thing. That's one special caveat. If you're a brand new agent or have not done at least 3 transactions in the last 12 months, then you're gonna fall under that mentor-mentee program, which is where that additional 20% goes. But we're taking this into consideration, given that you have that much volume, you're not a new agent. So you're gonna go into the 80-20, which is the standard that you come into EXP with. And the cap is $16,000. That's the cap for individual agents. If you're a team, then you can do half caps, you can do quarter caps. So just reach out to me. We can have that conversation. I'll walk you through this same number, but in the team perspective. The transaction fee is $0 right now. The transaction fee does not matter. Well, it matters before you cap, but in one way. At EXP, you get 3 personal transactions. I know I'm throwing a lot at you, but just if you need to watch this again, watch this again. At EXP, you get 3 personal transactions, meaning that if you want to buy your own house, or if you want to buy an investment house, or if you want to sell your house, you get 3 personal transactions every single year that you don't have to pay a split on. So even if you haven't capped, you can sell your own house, or you can buy your own house, or you can buy up to 3 houses in a calendar in your anniversary year without paying a split. The only thing that you would be responsible for would be the transaction fee plus the E&O and plus the broker review. So it's going to be $315. So just so you're aware, at EXP, if you're an investor, it's a very investor friendly company. But anyway, outside of that, if it's not a personal transaction, the transaction fee does not apply to you. Not right now anyway. So after you cap, then we are going to introduce a transaction fee. But right now, just so you know, it's $0 because you're on your way to cap. All right, so the E&O is going to be $40 and that caps at $500. And you're going to see reminders along the calculator. The broker review is $25. Going to stay there until forever. So that's going to continue going. There's no cap there. All right, so the sales volume, which again we got by 10.666 times our average sales price of the house, which means that the GCI is $80,000. So basically, for you to cap, the GCI is $80,000. What goes to the broker, you know, what's due to Caesar is due to Caesar, and then it's $16,000 for that. And then when it comes to your take home from a gross perspective, the gross split is $64,000. The transaction fees, again, they don't apply here because you have not capped. This is on your way to capping. Your E&O is, so far, it's going to be $440, and that's based off of a transaction. So I round up. So I go ahead and use the 11 transactions here, which caps at $500. So you're almost capping on E&O. You're almost capping on E&O. The broker review is going to be 25 times 11. That's what the number comes out to. Miscellaneous fees is $0. I include this in case you want to do some additional math. So from a production of 2.66 million in sales volume, your net commissions is $62,000. So $62,265 to be precise. So this is factoring in all the fees, factoring in the non-existent transaction fees, factoring everything in. Now, you may be thinking, well, Jaime, what if I want to be part of the agent equity program because I know I can purchase stock at a 10% discount with 5% of my commission? Don't get ahead of me. Don't get ahead of me. We're going to get to that here in 2 seconds. Anyway, so that's your pre-capping. That's your pre-game. That is you, once you get to capping, then you go to 100% commission. And you're going to see how that breaks down. So now what we need to do is our second little formula. So we know our transactions, right? And we also know the number of transactions it took us to get to cap, which was 10.6. We did that math, remember? So it was between our 10th transaction to the 11th transaction that we would cap in. And the reason we went to percentages is because we want to treat the pre-capping to its nearest penny, and then after that, it's prorated to the 100% commission. So you're not paying a split on that. So you know why that's important now. All right, so that is our number of transactions. And then our average sales price remains the same, which was $250. And then our average commission remains the same. All right, so how did we get these numbers? These were your numbers. These are the ones that, based off of the $10 million production, your average sales price was $250, and then your transactions was $40. All right, so far we're doing well. Now, if there's any questions, anything that you want to see in here, then comment down below. I'll make sure that I make some adjustments and answer your questions appropriately. All right, so then the broker percentage now after your post-cap, so post-cap activity, your broker commissions now is 0%, and your transaction fee is $250. This is where we introduce the transaction fee. After you cap, there is a transaction fee. You no longer have to pay a percentage. Now it's based off of the fee. It's $250. It's a standard across the board until it caps. I know I'm introducing so many caps, so many fees, and that's why so many of you get frustrated. Jaime, I just want a number. I understand that, and this is the easiest way for you to get to that number. I understand that many of you are trying to get all these algebraic equations, but you don't need them. So, and I'll share with you here at the end how to get this in your hands. So you can do your previous production and compare how much you pay to your broker and how much value you provided to them versus if you would have done that same production at EXP, what it looks like. All right, so sales volume now is this times that, which is $7.3 million. So 7.333. That's the sales volume. And at this point, that sales volume, the GCI, if you do a 3% commission, is $220,000. Now here's the fun part. Here's where it gets exciting. The amount that you paid your broker was $0. The amount that you paid your broker on $7.33 million on your split was $0. That is cool. That is cool. So here, what we're doing now is the post-cap agent gross commission. You keep all that from a gross split commission. Now let's factor in the fees real quick. So here, the transaction fee, as I mentioned, was $250, right? So that was $250. However, that caps at $5,000. So this is very monumental. You may be thinking, well, awesome, that's great, 5,000, that's a great cap, and that's a great positive attitude. Or you may be thinking, well, crap, I still have to pay $5,000 to the brokerage. That's stinking thinking. But anyway, that's whatever you feel about that. It is what it is. But when you cap at $5,000, then the transaction fee, which is $250 to get to that point, reduces to $75. That's cool. That's a win. That's awesome, right? But that I don't even care about. The $75 transaction fee, that's awesome. That's great. That's great. But at the end of the day, what's monumental when you hit this $5,000 cap, that means that you have done 20 more transactions, as you can see by the formula after you cap. When you do that, you hit the icon status. You become an icon agent. You're going to see how powerful that is here in a little bit, because this is something that no other brokerage on the face of this planet does for you. This is where the model already is pretty darn good and already ahead of the others. But then when you introduce that aspect, it blows it open. It blows it open. There's no competition. So then the transaction fee drops down to $75. So what you've paid in transaction fees is, again, what you're paying here is this, right? So it's $5,000 for the 20 transactions, and then the remainder, which is 9 or 10, no 9, because we already factor in the transaction over there, or round it up. So then we're looking at $700. So stay with me. Don't worry about this. Everything in yellow you can edit. Everything, the rest of it, does the math by itself. So don't edit it. When you get to, so the E&O, there's only 60 left. Because remember, we cap at $500 with our E&O. You don't pay that up front. You pay that per transaction. So some of you are in brokerages right now that pay $1,200, $800, whatever you pay at the beginning of the year. And you may have sold one property that year, and that was an expensive E&O. Some of you may have sold 1,000. That's great. That's awesome. It diffused. But here at EXP, you're not going to pay more than $500, and also it's per transaction. So you save some money that way. The broker review is going to be $733. So that one I'll put the round up, but basically it's this times, yeah, I need a round up on that one. So it's going to be what is that? $725. It's actually better. All right, anyway, so I'll adjust that part. I just noticed it now. So when it comes to the miscellaneous fees, we're going to put 0. Your post capping commissions is going to be this, right? So this is based off of this sales volume. Remember, you're doing 2 calculations, right? Sorry if I could control my mouse. So what we're going to do is we're going to add them together. So here is what you take home. Now, what's important to understand is your commission that you actually kept was 92, nearly 92%. This is what the GCI was, or the amount that you take home divided by the GCI, the amount of commission that you got to keep. So you can see here how we got to that math. The top number is what you actually take home, and C44 is the entire GCI, right? So this times this, this plus this. So it's 300,000, which is what was available to you, and you got to take home 92%. This is factoring in that addition, the beginning where it got you to cap. So that's why it's important that you understand what capping means. It's important if you're a new real estate agent that you ask your broker, when do you cap? Because if you stay at an 80-20 per split forever in your entire brokerage tenure, there's no way in heck that 80%, that it can ever go above 80%. But you see here with the $10 million production, you're at 92% for all intents and purposes, give or take a 0.08%. You're at 92%, and you started with 80-20. So whenever you're talking to transactions, whenever you're talking about franchise fees, whenever you're talking about splits, whenever you're talking about fees with the brokerages that you're with, make sure that you ask these questions, because here via math, I'm showing you what it looks like at EXP. But let's keep going. All right, so let's go into stocks, because this is one of the most, I guess, the difficult part to really land, because there are some assumptions that I will not be making here. I'm just giving you some numbers, but also a lot of agents don't know how to explain these to you because they just don't know. So here we go. Stocks. There's 5 ways to earn stock at EXP. One of them is, and only one of them, is based off of your personal money. And I'll show you how. On your first transaction, the moment that you make your first sale at EXP, you receive $200 worth of stock. Whatever the price happens to be, that's how many you buy. So when the stock was at $2, when it was at $3, you had 100 shares. So EXPI has absolutely just exploded. I'll let you look that up. So we're publicly traded, so you can see that stock rise. So there, it's now it's going to be I don't remember exactly what it was the other day, but you just take that, divide the 200 divided by the amount of shares that you would, the price, and then that's the amount of shares that you can buy. So obviously it's to your benefit to buy as many shares as possible, but at the end of the day, this is a gift to you. This is a bonus. You made your first transaction, you get a bonus of $200 in stock. The moment that an agent that you sponsor, so an agent that you recruit, an agent that names you a sponsor, the moment that they make their first sale, you receive $400 in stock. Now this is per agent. So if you have 5 agents, the moment that they make their first sale, that's 5 times 400, that's $2,000 in stock. This is just stock. We're just talking about stock. We haven't even gotten to revenue share. When you cap, remember capping is 2.66 million in sales volume, which means that you will have paid the brokerage $16,000. You receive another bonus of $400. So these are bonuses. These are things that you receive whenever a event happens. Now, remember that icon program that I was telling you about whenever you go on to become an icon agent? So hitting that $5,000 transaction fee, which is basically 20 more transactions after you cap. If you become an icon agent, which in this event you did because you hit that milestone and you had over 20 transactions, when you become an icon agent there, the entire $16,000 is eligible to come back to you in the form of stock. Now there are some requirements for that, and I will link a video on what those are. However, you have access to $16,000 coming back to you in the form of stock. So if you do that type of production, so basically that goes away and that goes away. So that entire GCI is yours instead of 64. So you can see how this number, and you will see how that number right here amplifies. So you get to take home a lot more. But anyway, so that is the icon agents. So for you having sold that many properties, 40 properties, 40 transactions, from a split perspective, you paid 0% to EXP. Now there are fees, and you saw what they break down to, but you get all of that back in the form of stock. How powerful is that? Ask your broker right now, hey, if I hit a number, let's just say $10 million, Mr. or Mrs. Broker, if I hit that number, will you give me back $20,000 that you haven't that I paid into the company, the $24,000? And it's at that point that they're gonna laugh in your face and ask you, what in the world are you on? So think about that. If you're a $10 million producer right now, think about that. Anyway, so let's keep going. Now, 5% of your commission, you can allocate 5% of your commission at a 10% stock discount. Okay, so what does that mean? That means that when you're earning what's about to hit your bank, taking out the split, taking out the fees, when that's about to hit your bank, it makes one final pit stop at the agent equity program. And if you're part of that program, which is voluntary, you don't have to be, you can allocate and purchase 5%. We're using 5% of your commission. You can purchase EXP stock at a 10% discount. So whatever's on Wall Street, if it was $10, which it's not, but if it was $10, you would purchase the stock for $9. So what that tells us is that you, with your money that would have hit your bank account, which is $13,789, that money from all the commission that you earned is worth $15,000 because you received a discount on that. So the retail value of that is $15,000. So that's how we get to the additional revenue. Now, you may be thinking, well, Jaime, that plus that is way more than that. I am giving you precise numbers. The reason that this is 18 is because I just take the delta, because this number is already factored in up here, but the delta is not. So the additional value that your stock now has is not. So that this minus that, that's how you get this plus this plus this plus this, and then the delta. So that's why you see it minus your initial investment, because that's money that's already accounted for up here, but also that's money that's in the game. The only way that you lose this money if is EXP stock goes to zero, which is, I can't make a financial representation, but the likelihood of that happening is not that high, my friends. We wouldn't be the fastest growing brokerage in the country right now if we were heading down that way. So now, if you factor in the additional perks, the additional value that you now have for the entire production that you've had so far, you retain, from a GCI perspective, factoring in the stocks, 98% of your book value. How powerful is that? Isn't that crazy? So now compare your 90-10 split that never goes away. Now compare your 80-20, your 70-30, your 60-40. I've heard 50-50. So just understand the power right here. Now, this is when we get into assumptions. This is just for your benefit. Again, I'm not making any representations, but if the stock goes up 5%, this is what the stock, your portfolio would be valued at. If the stock goes up 10%, if the stock goes up 25%, when you hit 25%, look at what happens. You actually get paid to be at EXP. Now, again, this is not financial representation. This is for you to go home and model. Take what happened to the value in 2019, 2020, what's happening in 2021. Go and look at the stock and see where it's at. Make your own determination there if that's valuable for you. So anyway, this is the breakdown of what that same book of business would look like. Now, if you didn't cap, just as an example, when you go through here and get access to the calculator, then you cannot add this. So if this number is 0 or you didn't cap or whatever, then take this away. Because that's not something that you would earn back because you did not hit your 20 transactions. So this is the only one that's pending, if you will. Everything else is spot on. So just make sure that you're aware. All right, so let's talk a little bit about revenue share, and then we won't cover too much, but just understand that there are 7 levels of revenue share at EXP. Now I have a full breakdown on how revenue share looks, so I'm gonna link that up here so you can take a close look at what it looks like. But a capping agent, which is somebody that sells 2.66 million in sales volume, as we know, if you attract a capping agent and an agent that joins EXP and you sponsor them on your level 1, so a direct personal personal agent, then you receive $2,800 per year per agent. It's that simple. Now, assuming that they cap. If they don't cap and they're half cappers, then divide that by 2. So this is either this column or this column. This is not, don't add these together. The reason I put these together is because there's a difference between FLA and FLQA. Now, we're not gonna have time to break all this down in this video, so make sure that you check out this video right here for the revenue share component. And I'll also link it down below, but just understand the upside on every single agent, on every single level that you attract agents with. And you know, at every single step of the way, you're going to be receiving money, but you see the difference between the revenue share from 160 to 3,200 is monumental. So make sure that you link up, that you watch the video that I link on the cards and also down below to get a full explanation of the revenue share. The only thing I want you to think about, at the moment is, if you attract one agent, per year, what would that look like in your business? If you attract just one agent on your level 1 and they never went out and attracted anybody else, they never recruited anybody else, and they were cappers, what would that do for your business? So this is a revenue share that we get into a lot of speculation, that we get into a lot of assumptions. I just want you to think of one thing. If you can attract one capper every single year, which is really not that difficult to do. I have one of the fastest growing teams at EXP Realty at the moment. So I can personally tell you that the model is spot on. It is where a lot of real estate agents need to be. So if you're the person that sponsors them into the company, if you can sponsor one agent and one agent for 10 years, then you can see what that looks like. You can see that 10 times, by the 10th year, you're receiving $28,000 a year in addition to anything that you've done over here. So make your own assumptions, make your own numbers, if you will, just so you see what it breaks down like. But please be sure to watch that revenue share video, because I really get into detail of what the differences are between a capper that's an FLA, a capper that's an FLQA, and what personals means. I just wanted you to see in one place what the financial opportunity was if you went on to have that same production of 40 transactions and an average sales price of $250 and the total sales volume of $10 million. Now, if you're here, it means that you've watched the complete video. Thank you so much. A like is going to go a long way. If you wouldn't mind hitting that like button, but also if you want access to this exact formula, then I'm going to invite you to email me at admin@JaimeResendiz.com. admin@JaimeResendiz.com. This calculator will be made available to you. And if you want to book an appointment with me and walk you through what it actually looks like for your business, or what it could look like for your business, then there is a partner with me option down there, so we can schedule an appointment and get to work in figuring out what it can look like for you.